All right. Good morning, everybody. Hope y'all had a good weekend. Nice long weekend. Kind of quiet on the news front too. I mean, the tariffs got walked back on EU a little bit. Market seems to like that. Otherwise, we're just holding out, looking to see if that low we put in last week is going to be a higher low or not. So far with the gap up, it would be a yes, but we still need to run up and break 6,000 to confirm the higher low. Looking at what's going on around the world, it's mostly green on the screen. Small caps doing really good neck to neck with the NASDAQ, S&P at 1.5, and the Dow kind of dragging its feet. Still, everything looks great. Some talk out of Japan. It's worth keeping an eye on that. If you see any headlines talking about Japan and their rates and their bonds, it's worth taking a look. Maybe get caught up on that situation because, yeah, they can move markets. They they absolutely can move the market, and that would be a nice little sleeper that we wouldn't see coming in, right? Because everybody's looking at Kashkari or whatever Fed speaker is going to be out chipping their teeth today, and it looks like he's speaking every day this week so far. He already spoke today. He'll be speaking again tomorrow, and then he's out chipping teeth again on Wednesday. Busy, busy, busy. And he's in Japan right now. Imagine that. Not a coincidence. Got some auctions this afternoon, 11, 11:30, and 1 o'clock. This one kind of stands out a little bit. I can't pronounce that name. I'm not going to try. 12:20 today. Don't usually get a speech from them in this part of the day, and it's got a really high impact gauge. So put that one on your radar. I'll try to dig around and see if I can come up with what's going on. Hmm, we'll see. See, they're talking about the dollar dropping again. That's been part of the plan for a while, right? The Scott Bissett, Secretary of Treasury, and the 333 plan. That's one of the threes. So it's in line with what they wanted. And it seems like the steel comments from Friday were walked back as well. So we have not only precious metals, but metals and mining this morning getting a lot of flow. Okay, that bond on auction on Wednesday for Japan is part of what's going on. So keep your eye on that. It's going to be a bit of an odd week, right? Compared to the typical things that we would be looking at. So we'll start with the daily. this conversation that we've been carrying on these higher lows that we've been setting. So we pulled back last week, but until we run up, we don't know that that's going to be a higher low, right? We could just keep falling and falling and falling, and then there was no higher low to set. So we've started to run up. If we make even half of this distance, we could define that as a higher low. It would be better to confirm it above 6,000. So for right now, we've set the stage for a higher low. It needs to confirm. We're back above the 200-day moving average, but we haven't closed above it. And this is a daily chart. So this poke above the 200 doesn't really count. We held above the 20-day moving average last week after we dropped down into it and came back above it. We are above the 10 and the 4-period daily moving average as well. So we're above every single moving average, but none of this counts until we close above it, right? It's a daily chart. We need a daily close, and we don't have that yet. If this is as high as we get, I'm not really of a mind to call this a higher low. I want more than this before I would define that as a higher low. Otherwise, this is just a little bit of a pullback before the next leg down. So we need to get higher first and define that as a higher low. We are above the volatility trigger and zero gamma, but not by very much. We're close enough to those two that there's no edge into leaning into them, expecting some sort of dealer hedging dynamics, right? If we would think about how they would respond in a positive or negative environment in a heavy way, if we were -3 or +3, then we would expect to see them influencing the market with their actions. But this close, no. Same thing with the VIX. Since we're not heavily negative, any moves in the VIX would be more appropriate to match to a swag level than, you know, any sort of tick for tick movement. $74,000 or 74.5. Pretty good. It's our average daily level going back a few years. Now, if we just go back in the last 2 months or so, then 74 comes up a bit light because we were seeing 120, 150, 200s, even 300s for a while when things were getting pretty nasty before Liberation Day, right? And even a little bit after Liberation Day, we were seeing those really high levels. So that's done. We're back below 100 consistently. Yeah, a little poke above now and then, but we're stabilizing. And 74 is fine. Really, it's better than we were Friday, which was at 40. I guess that was Monday, a little bit of overnight. And that reminds me, when we have these short weeks and the futures open anyways for a little bit of time, what you want to do is take that data from Sunday night into Monday and wrap it up into today's data and treat all of it as one big Globex session. So we would still be focused on Friday's close and where we opened this morning, as if Monday and all of its data was nothing more than just the Globex for our own trading day today. I know it's a little odd. A lot of brokers will behave that way when you look at their charting software. So it's not out of line to approach it this way. Do the same thing with your volume profile structure if you can, right? If you can anchor your profile. I know TradingView allows you to do that. Liquidity risk indicator, where did you see that? 10-day, 30-minute volume profile. Got TPO on the right, profile on the left in green. Little discrepancy between these two. As we talked about last week, this point of control very likely isn't going to move anytime soon. And if it does, it would just move down here. And that's what TPO already did. We're likely going to move that again, though, when we lose these candles on the left. The question about liquidity risk indicator, this thing down here at the bottom is nothing more than the overnight volume, right? So on Thinkorswim, just type in the word night and you get cumulative overnight volume. That's a fun word, cumulative overnight volume. Now I took that and added the lines to it, like Tokyo's open, Tokyo's close, London open. That's just the additional stuff that I added to it. And then, of course, keeping track of the average. So mine's just a little more pimped out, but that's where the indicator is. As for this one, if you look in the description of the YouTube where the replays are at, I share all of the charts that I use on Thinkorswim. So you can just go to there and get all of my Thinkorswim indicators. We've already hit the upper ADR half. If you notice, though, things are a little off. As I mentioned, it's counting us from Sunday night as if all of this was a part of one trading session, and we're hitting the upper ADR. Interesting enough, it respected the ADR half on the upside as well. Not unusual, right? You're going to see when you get more into day trading, you'll see a lot of discrepancies in brokers and how they deal with short weeks. So the ADR today on the ES is not going to be very helpful, obviously, with it using all of this data. But on the SPX and on the SPY, it will be, because it will be set at the open. So at 9:30, the market's going to open. We will get those ADR levels fresh and clean, and it won't be picking up all of the data from before. The floor pivots for the week, we are above the weekly floor pivot. That puts us in a bullish bias. We can see the daily floor pivot all the way down here, and it doesn't really show a channel. And that's because this morning the channel is so narrow that we can't see it at all. If we look at the channel from Friday, it was relatively narrow there too, right? So it just constricted from Thursday, Friday into today. We'll just back up a little bit. It was wider and then narrow and even more narrow this morning. Now, a narrow channel implies that if we break out, that breakout can stick. We already are broke out. If we evaluate where we closed on Friday, or even if we want to use a little bit of that Monday data, we're above both of those. I'm going to continue to focus on Friday's close. We're outside of Friday's close, and this narrow channel says we can keep it and we can continue to run. To be fair, this channel doesn't make price do anything. It's not going to make us break out. It won't stop us. If we did break out, it won't bring us back in again. It's just an evaluation on what to expect from price if we did get a breakout, which we did get. Having said that, if we come back inside of Friday's range, the weekly floor pivot is going to be my first target. That's 58.50 basically. If we continue below that, the daily floor pivot is going to be my target. Now we're already a considerable distance from that daily floor pivot, so it's worth asking, where's the S&R lines? We're above the R1, might be hard to see in the stream, but it's right there. We're above that, but we're stalled out without hitting R2. There is a play where you go from R1 to S2. Yeah, it's a bit of a drop when more than half of the day is done already. I know, I get it. Newer traders don't understand that logic, but we started trading last night at 6. So it's past 6 this morning. It's more than 12 hours. It's half the day plus some. So we're running out of time if we were going to go from an R1 to an S2. It would start with breaking our own Globex low or breaking that high that we set Monday in the Globex, then breaking our Globex low, getting through the floor pivot of the week, then getting through the floor pivot of the day, then down to S1, which would also be Friday's low, and then into S2, level by level, step by step. We've already tested this high volume node here. And if we try to make a run to the upside above 59.50, we've got the point of control and another high volume node here. If we look 2 weeks ago, this shallow area of last week, which is a little odd to say the least. Last week, we cut through that zone multiple times and we really didn't leave much behind. But above it and below it, we put in a significant footprint. Now that gives us a bit of a channel into this week. So we've got a supportive structure underneath us and a resistance overhead, and we need to get out of this channel. GTFO, get out of the box, right? If we can get out of that 58.50, then 57.50 is the target. That's simple enough. We got a big air gap down here, air pocket, whatever you want to call it. If we break 57.50, then 56.50 is on the table really fast. Take it the other way around. If we can get through 59.50-ish, or this point of control, high volume node, if we can get through last week's levels, so last week's high, then it's game on to the upside, and I would be using measured moves, but round numbers and 50s. So 6,000, 60.50, 6,100. It's the way that ES moves, right? We've kind of gone through that before. I think it's been a while since we went through it, but if you watch every day, you've seen it. Five-day, 5-minute volume profile and TPO. On Friday, we got a new VPOC, just barely, but barely counts. Hand grenades and horseshoes. It's also a cog line, 58.11. So we have 2 overhead and 1 underneath this. I think it's only 1. It's back out here a little bit. Oh, we got plenty below us. We've left a lot behind, right, to say the least. These line up with the one that we were just looking at on the higher time frame, 59.50, 59.60, that overhead high volume node. This here. So that's the significant level of resistance that we have to get through this week. Two different points of control, which, they're close enough together anyways. They do kind of count as a zone, and it's right against an options level, 59.50. It's going to be really difficult to get through there. So if we do get through there, it's going to very likely be news, either shock and awe, something we didn't see coming, or really good economic news. And I keep looking at what's on the economic calendar for the week, but we don't have anything scheduled that should provide that sort of push. So that puts us back into shock and awe, surprise, something we didn't see coming. And well, we can't see it coming, so how are we supposed to know what it is? Very likely it'll be some kind of tariff news, or maybe positive news on, the war with, I don't pick one. You got the Russia situation, Israel situation. Good news on either one of those two fronts could do it. I don't think we have the push to do it on our own. It's going to take something outside of us. We're back above the 10-day, just barely. When we're this close to the 10-day, we can just cross back and forth, chopping around like it's nothing. We need to expand and get away from that 10, either above or below. So it's healthy, it's fine. We're at the 10. There's nothing wrong with that. But whether we're above it or below it at this point doesn't really offer us any value because we're so close to it. We need to just get away. Now, on the other hand, when we look at how far we've moved and we see the candle sizes that we've been dealing with, digesting a little bit, healing, correcting in time rather than price wouldn't necessarily be a bad thing. We hit some extremes, right? When we had price almost 5% above the 10-week. So it's pretty extreme. We faded back. That was good. It's healthy. Looks like we're trying to run back up again. This needs to calm down and digest a little bit. So a sideways week hovering around the 10-day would not necessarily be a bad thing. If we look at the expected move for the week, this indicator does not function well on short weeks. In fact, I don't trust it on a short week. And that's because this indicator can't see the information that it needs to make this wick. Mobius calculated this thing, and I'm a thinkorswim coder. I can code my own stuff, and I've never seen the code that he uses, never seen anything like it. So it can't self-adjust when there's something wrong, like a short week. The good thing is we can get the numbers for ourselves. So the week's expected move comes from the options data. We were looking at the ES, so want to go back to the ES options, and we want to look at this Friday's expiration. Now, we don't want the expected move from now because it's already been changing. We want it from Friday's close. If you're on thinkorswim, you can use the go back and not that on-demand trash up there. It's called go back, all right? Think back right there. You can use that, set the clock back to Friday and get the expected move, and then hand draw those lines. right? So there's ES on Friday. Because it's futures, you got to give it the full contract. Yeah. Gonna give me trouble. I will get it for you guys, but that's what you have to do to get it, right? You got to go in and get it from this, from the go back. Then you'll have the week's range. It's not expected to be very wide because we don't have a lot of economic events on the schedule this week that would cause it to be wide. And that go back, by the way, if you use SPY or SPX, not a futures product, it'll work a lot easier. So you can get your expected move range for the week on SPY and SPX a lot easier. Looking at what's going on this morning, we're basically risk on, pretty good news, keeping us pushing. Looking at what's down first, China's down, MCHI, KWEB, and then precious metals, basically the miners really, are also down. Emerging markets close, it's not quite there yet. 0.5% is what we need. And emerging market is basically China anyways, which I still don't understand how they get to keep that qualification at this point, but whatever. Everything else is up. If we had to pick and choose something that wasn't down or wasn't up, kind of hanging out in the middle, um, some junk bonds, the volatility for Russell, uh, NASDAQ volatility, jets, cloud computing, which a lot of time cloud doesn't get movement in the pre-market anyways, oil and gas, some retail, these are all flat and not moving at all. Otherwise, everything's up. So we have the bullish backdrop this morning to really push. But like I mentioned earlier, I don't think that we've got enough to break that 6,000 level and keep going. We could get some 0-day flow or something like that that can, get us over the hump. I just don't see it, right? The chips are up 2%, but they're already starting to lag a little bit. The Mag 7 up as well, but it's also started to lag a little bit. If you look at the market breadth this morning, 71% of the S&P 100 is up more than 0.5%. That's pretty positive. That's pretty bullish. 71% of the entire index is up more than 0.5%. So when we hear that, the first thing I think of is, what are the ones that are down then, right? If there's 30% that are down, is there a particular sector or index or industry that are down more than 0.5% that would be going in the other direction? And we only had one down more than 0.5%. not really what we were looking for. So at least we know that there's no specific industry or sector that's negative, but it really didn't shine a light like I was hoping for. 70% of the NASDAQ 100 is up this morning, more than 0.5%. And again, that's pretty bullish, right? It sets us up for the Alpha protocol. It's a trade plan that I came up with that works like the algos do, right? The algos will come in and they'll trade an entire basket of stocks. Well, why can't we, right? If they can do it, we can do it. So if you put together your own basket and you end up in a very strongly correlated environment where 95, 97 names are all going to the upside, you would trade everything in your basket to the upside. And if 97, 98 are going to the downside, then you would trade everything in your basket to the downside. To be fair, after I've put that strategy together, I think I've used it 3 times a year, maybe 4. In 2020, we're using it a bit more. But for the most part, it doesn't get used because I keep it really tight. So to see it, we want to go to the Visualize tab. After the market opens, go to Index Watch and choose your index. So we got like NASDAQ 100 or the S&P 100, and you got your issues up here, right? We all got issues. So you want to see 95, 97, 99, whatever your trigger number is. You want to see that many in the issues for the Alpha protocol. And when you see that number, you buy everything on your list. Pretty simple. I keep that number really high so it doesn't trigger for me very often, but I've known people that use it in the low 90s. You do you. It's been a while since we've had a really good short covering rally that brought small caps into it. Seeing small caps up this morning, it doesn't hurt to kind of poke around in there. Maybe we get something this week, right? So you'd want to see the ETF IPO or just IWM itself. I think there's a few others that we use along the way. And of course, the classic short covering names like GME and those guys. Just see if they're starting to get a little juice, right? Because it's been a while. And that's usually the MO. Let things calm down. Nobody's looking, and then take a run on them. Just get things juiced. And it looks like Jets got caught up, but they're just dashes at this point. We're not really getting any pre-market trading on them, just an algo print. So it needs to clean up a little bit. Pretty simple day at this point. We've got a bullish backdrop. We got a risk on sentiment. The Mag 7 and semiconductors are really bullish. There's no reason for us to crash and burn or even drop back to test that low that we put in. And all we have to do is stay outside of Friday's high and Monday's Globex high. Now, I made this box a bit bigger than it should be. If we want to stick with Friday's high, then that's Friday's high. And we would treat everything since Friday's close as one trading day. So if we get back inside this box, we want to trade it all the way back down, right? Level by level. You can just mark out Friday's midpoint 58.11 cog line, basically. I didn't get that right to the top, but it's close enough. Otherwise, we zoom out, look bigger picture. We've got last week's range to deal with. And on a daily, that's a TRB setup, right? And a TRB setup brings us back to the previous high. It is a bit like a Morningstar reversal too, but it doesn't belong up here, right? If we were looking for a Morningstar reversal, we wouldn't want to find it there. We'd want to find it, like way down here somewhere. So a 3-bar swing low, sure. Yep, absolutely. It's a swing low. You can run the distal lines and proximal lines just like you would on a swing low. That fits. And with this push that we're getting, it's like a drop base rally play, but TRB runs it back to 6,000. So really simple day. Keep the breakout going. If we don't keep it going and we begin to collapse back in, then it's level by level all the way back. Really kind of easy. That's what I got for you guys. Be careful, be safe. I'll see y'all tomorrow.